Hello and welcome to simplerstocks.com. My name is Don Kaufman. We are going to look this evening at none other than the financials. Once again, I talk about the XLF quite often over here. However, tonight we're going to look at some very detailed specifics of what's really going on inside of some of the financials. First and foremost, if you're not acquainted with the XLF, it is the Spider Trust Financial Select Fund. Ultimately, what that means, it's comprised predominantly of some of the very largest financials over there. The Citis, the Bank of Americas, the JP Morgans, although not limited to some of just the marquee financials. There's actually an entire plethora of different financial organizations that kind of comprise the XLF. The point that I want to make specifically with the XLF, first and foremost, and I've talked about the XLF a number of times over the last few weeks, we've actually hit this 25 level. Okay, and kind of reverted down off of it a number of times. Here's once, twice, maybe third time's the charm. That is not what's actually concerning to me. What's concerning to me is the XLF, and we'll zoom in here into just the last 2 weeks of trading. The XLF specifically is trading down, and let's not call this substantial, because the XLF, just to move, all right, takes a lot, meaning that, the sheer magnitude of the XLF and the market cap here, we've gone from 25 roughly to 24.67. These are not massive moves on a percentage basis. Nevertheless, the XLF doesn't really make those massive moves on a percentage basis. To kind of give you a little perspective, going from 23 up to 25 over here, almost takes like, an act of God, if you will, to move 2 points in the XLF, an act of God, and of course all the way from February to right up here in mid-May, so many months to make a $2 move. The point that I wanted to make with this is not only the XLF kind of failing off the 25 level, what is most surprising about this is what have the bonds done? Okay, and when I talk about the bonds, let's get specific here. Let's talk about interest rates. All right, so we're going to look at what's called TNX. Okay, and as the market's actually kind of wrapping up the day over here, and the S&Ps are pretty much massively unchanged, but I'd be remiss if I didn't mention, and that's actually why I'm bringing this up. So the bonds in the last few sessions have traded down and down big, and when the bonds are trading down big, that explodes interest rates higher. And the interest rate that we're looking at right now, and that's what the TNX is. And this is not a quote-unquote a tradable product. The TNX is nothing more than a 10-year Treasury index. Okay, basically, what does it mean? It means it's tracking, the 10-year notes. The 10-year notes, the futures, are the ZN. The ZN's traded down. The interest rates actually fly up, what we actually call yield. So the interest rate right now, it's not 22.66. If you move the decimal point one place, it's 2.26%. Why, if the interest rates are exploding up, aren't the financials performing well? The financials are what? Interest rate sensitive little animals out there. So almost any financial that you look at, so let's start to go through some of the grouping over here in financials. Let's look at something like JPM. Okay, so we'll take a quick look at JPM. JPM looks just like the XLF, kind of failing in the last couple of days, not performing like you think it would with the bond market over there. Let's take a look at Citi. Okay, and these are some of the most sensitive products. And there's the bell in the day with the S&Ps, well, unchanged. Citi, not performing very well in the fact that the bonds are down, interest rates are up. I'll kind of continue on over here. One of the better performers in the sector lately has been like Morgan Stanley. Morgan Stanley comprises a pretty good deal of the XLF. What is it doing? Absolutely nothing. I wouldn't say that this is a bad performer. This is one of the best performers kind of in the sector. Last but definitely not least, again, I'd be kind of remiss in not mentioning Bank of America. Okay, the big behemoth that it is. Not performing terribly, but not, exploding to the upside like you would believe with interest rates being down. Now, if you look at the 10-year, we look at the 10-year here just over the last couple of sessions. Look at the last 2 sessions in the 10-year. It's about as ugly as it gets. You would think there'd be some bump to the financials. This, leads me to believe that there could be a larger kind of breakdown in specific financials. Either you want to go after the XLF, which I'd have to say, I'm already short the XLF, or you could start to look to some of the better performing financials to look for short opportunities out there. Those could be your Bank of America, your Morgan Stanley, your JP Morgan. Okay, if you want to go after Wells Fargo, fine. Okay, but these again are short opportunities, and that's predominantly what I look for in a market like this. When I look at risk reward, the short opportunities seem to be more effective than some of the long opportunities this time. So again, whether you want to stay specific to the XLF and look for a short position in the XLF, or you want to go to an individual financial product, okay, again, looks like the short side might be the right side to be on over here, given the fact that not even the bonds right now selling off seem to be able to help the financial sector. Thanks a lot, everybody. Join us on simplerstocks.com.